Alright, you guys, so I just posted the play on Google earnings and seeing how Bitcoin sold off on, this was the hour that the Google earnings came out. Saw it come down. Now I want to show you in real time, that's what today's about, I guess, is real time what's happening. Right, so here we are on the SPY at close. Okay, as I talked about, at the end of the week, you would see what will turn out to be a big wick, right? Now, that wick is forming is what's happening. So there's your close on the SPY, right? Or your close on the SPY is here, actually, when it says post, right? Okay, so now I want to show you. So Google comes out, they report, and they say, we didn't have good ad revenue from YouTube. That's what this is about, okay? So last time Snapchat came out and they said they didn't have good ad revenue, and that caused the market to sell off, right? Facebook, everything the next day sold off. But now it's Google for the second quarter coming out and saying they're not getting the ad revenue. Even though the earnings wasn't dismal, the market is seeing something. So I want to show you, this is your end of the day on the SPY, right? And I was talking about this idea, and that's what I want to teach you, is like you can really learn what's going to move the market, and that's going to help you to understand how to trade through this recession, right? So now I'm going to go over to the NASDAQ futures. This is NASDAQ futures. It is 326. They've only been open on the futures market for about 26 minutes. Now look at what's happening over here on the NASDAQ, NASDAQ futures, okay? Look, you're down 1.84%. You see what I'm saying? This was around the close of today. You're probably around here. And within 23 minutes, you have sold off 1.82% on NASDAQ futures. So everybody is behind the curve, but these guys are all just repeating the same information, trading the same trend lines, and they don't understand what a bear market rally is. They don't understand news catalysts. They don't understand. They would never even think to say Google is going to cause Bitcoin to sell off, right? Just like they would never say the spread between the Italian and German bond was indicating a crisis in Europe, which I told you in June of this year. So there you are. This is Google selling off. And what happens is now you're gapping down, and so you can fully remember this shit, man. So what happens next is Microsoft had its earnings. It was kind of okay, but its its sales on the cloud were kind of mediocre. But what this causes is a ripple effect. It causes fear in the market. And so Google, then what will happen is this will trickle out to other companies. And so what they call a sympathy, right? So just like if Bitcoin moves up, the sympathy plays Ethereum's going to move up. In the crypto world, everything's kind of distorted like that, but just think of it as another sympathy is if Netflix moves up, then Disney's going to move up because they have the streaming plus, right? So if Google takes a hit in the ad space, and then you have Meta, which also is based on ads, and then you have Snapchat, which is based on ads, and so on, and you just follow that ripple effect, what happens is you get these kind of a flush, right? And I said this exact idea, and it's not that I'm not trying to say I'm always right. I'm trying to show you that these things anybody can do if you understand how the information that you're seeing and understand the market. So just follow this logic with me, right? We were at these levels, and there's all these options, right? When options expire, it is the casino paying out, or the casino wins when they expire out of the money. If they expire in the money, meaning if we bought a put option at 367.73, and let's say the SPY comes down to 360, then to keep it real simple, if you understand options, understand I'm trying to keep this real simple. It's a lot more complicated, but the casinos then got to pay out the difference, right? Minus what you paid for the play, right? So that's what's been happening, and that's what a squeeze is. So these squeezes are on derivatives, and once you understand derivatives, then you can understand why this market has been holding up, because going back, I know that in October especially, we had record amount week after week of put options being purchased. So it pays for the casino, even though they think this thing is going to tank. They can see this data, but it is better for them to buy the common stock to squeeze the price up so that the derivative of the stock, the put option, does not expire in the money, because an option contract is on 100 shares, so it's multiplied times 100. All right, and so what we saw and what I was talking about is this short squeeze. And if we go to the 4 hour, I think that's maybe I was using the daily for this idea. Yeah, exactly, right? So as soon as we started this squeeze above this line, right, the 50 EMA, that's what gave me the insight. If they could get this price up here, that's going to cause the algos to buy. The price is going to pump, and then you can't predict this stuff. It could have gone the other way. Google could have come out with great earnings, and we have a continuation to the upside, but they did not. And so it's kind of like, you don't want to apply too much common sense because you'll get wrecked, but sometimes you got to just use a little common sense. And that's why I was calling this to the downside and saying, hey, at some point this week, these earnings plays, this earnings reports, they're not going to come out great. And so that's what you're seeing here is you see this is going to turn into a wick, come down to this level, and it might hold. If you break the critical target level, then you're looking at a lower low. Okay, if you come down, if this week, so this is going into next week, if this week you come down and you can't get back above this, then you're looking at this, a lower low down to this target. Okay, and then you reposition at that point. All right, so that's how that works. And look over here, the SPY is doing a little bit better, but look at where we're at, guys. Look at where we're at right now. This will, on the weekly chart, this is going to end up looking like a wick, because you're right back down. You see the squeeze? They squeezed up. They got everybody to buy in, all the algos, and now it's sitting right here at this 50. When you break the 50 and you come back down, this is not, when you come back down here and you break this line, then you're looking at a lower low. You're coming back down to this blue trend line, or potentially something more bearish. So I would just want to take the time to show you in real time. This is real trading. This is how it works with an earnings report and how much effect it will have on the whole market, right? And so anyway, watch this on Bitcoin. You can see this wick, the way this will probably play out depending on how big the move is. Look, 1, 2, 3. You might get another on Bitcoin. What you might see is, what I would expect is that if there is going to be a big dump, you might see one of these, right? Because they need to close out. They need to liquidate these leverage shorts in here. So you might see a break up to, you might even see a break up to that 21. That would be a pretty big pump on that, but that would liquidate most of the shorts if they're sure, which the information coming in now says that the market is going to sell off later in the week. So if that's the play, then they might give you a pump, and then you'll get the down to support, and then look at that time to see the volume of the sell-off, right? Because it might, if it breaks this support, then you're going to get a capitulation style move down to here. But that depends on what's going on with the SPY. Hope that makes sense.